Hello everyone, welcome back to my channel. In my last two video, I have discussed about what is mutual fund and what are the benefits of mutual funds. Today I am going to discuss what are the different types of mutual fund. So before I start with this video, I should tell you that the type of mutual fund is a vast area and mutual fund can be segregated based on different kinds of for what reason you are typing them. So I am going to just touch base upon the few of the types of mutual fund, but there are different types of mutual fund which you can see in actually in the market, which may not be covered in this video. So let's start with it. So first we can there can be a type of mutual fund based on the structure. So first we are going to divide the mutual fund based on the structure. So, based on the structure, there can be three types of mutual fund. First, it will can be open-ended fund, it can be closed-ended mutual fund, and there can be interval fund. So, what is a open-ended fund? So, in this cases, where a mutual fund, you can go and purchase the units of the mutual fund, or you can purchase or sell the units of the mutual fund anytime during the period. So, that is known as open-ended mutual fund. So in that cases, you don't have a restriction when you want to purchase the mutual fund units or when you're going to sell the mutual fund units. In other hand, where you have a close-ended mutual fund, in that case, the mutual fund will be only restricted to a certain number of units. So the units outstanding for a mutual fund cannot go beyond what is the predetermined. So it will be only open for a particular period. On that time only you can go ahead and purchase the units for the mutual fund. Once you're holding those units, it you can be only sell it upon maturity. So not only actually sell it, it will get matured after at the certain point. In that case, it is not like you cannot do anything if with that units, if you're holding in the middle held in the middle, you can go ahead and trade those unit into the share market like other securities, and the share prices or the price of that close ended mutual fund will depend upon the market. It can be higher than the NAV of the fund, it can be lower than the NAV of the fund. Now, the third point is the interval fund, which is the middle of the open ended and close ended. So, for the interval fund, it will not be open throughout the period, it will be open to a certain time. So, let's say maybe for a fund every month, first 5 days, you can only do the subscription and redemption for the mutual fund. So, those are called the interval funds. So, that is based on the structure. Next, you can have a difference into the mutual fund based on the asset class. So based on the asset class, you can have equity fund, you can have debt fund, you can have balance or a hybrid fund. So as the name suggests, this mutual fund type is happening based on which asset it is investing. So if it is investing only into the equity market or only into the equity shares, it is going to be a equity fund. If it is only investing into a debt market, so it is only investing into the bonds or it is only investing into the T-bills, so then it is going to be a debt fund. If it is investing into the both of the equity and the debt, it is going to be a balance or hybrid fund. Now how much it is going to invest into the equity and how much it is going to invest into the debt, whether it is going to be 50-50 or how much, what will be the proportion of investing in where, those all will be written into the prospectus of the fund. So that is also again the objective of the mutual fund. So based on that, there will be a classification. Third, we can see the classification of the mutual fund based on the investment objective. So based on the investment objective, we can see different kinds of mutual fund again. So you can have a growth fund, you can have a income fund, you can have liquid fund, you can have tax saving fund, you can have pension fund, also you can have fixed maturity fund. So if you see here, these are the different kind of objectives. This is something which I was explaining in my prior video. So if you have want a fund where you are looking for a growth on a certain time period, so on those cases, those will be invested, you can invest into a growth fund. If you are looking for a income after a certain interval, then you can invest into a income fund. If you just want to invest into a fund, you but you're majorly looking that I want to take out the money anytime I want, those cases you can go into a liquid fund. Sometime we want to invest into a tax saving funds, so those cases we will be, obviously we all do that, we all invest into the tax savings mutual fund. If I also explained into my prior video that if my objective is to get a return after the retirement I want to looking for, then I will invest into the pension fund. I can have a fixed maturity fund which will be already invest into the fixed maturity, like they will invest into the CDCPs, they will invest into the T bills. So those will be coming under this. So these are the majorly based on the investment objective. Again, you can have a mutual fund category based on the risk. So as we know, we can have different kind of mutual fund. We can have a very low risk mutual fund, we can have medium risk mutual fund, and we can have a high risk mutual fund. So not only always the high risk mutual fund is only equity fund, but yes, there can be a situation that a high risk mutual fund can be have a portfolio with a different securities majorly into the equity. You can have a medium risk fund where you will be, can be a hybrid fund. So that can also be a one area. You can have a very low risk mutual fund, so mainly which are the pension funds, or mainly which are people who are investing into a very less riskier mutual fund. There is a particular kind of fund which most of the people are not so much aware about, are the $1 fund. So those are like very low risk mutual funds. And also we can have a specialized fund. So what are the specialized fund? So specialized fund can be sector fund, specialized fund can be index fund, this can be fund of fund, this can be international fund. So these are specialized fund. What can be a sector fund? A fund which is only investing into a particular sector. So let's say a fund which is only investing into a banking sector, or only investing into a real estate sector, or there can be a fund only investing into a pharmaceutical sector. So those will be a sector funds. You can have a fund which are the index fund. What are the index funds? Those funds are mainly investing or replicating the index. So it is investing into, let's say, MSCI index, or it is investing into the S&P, or it is investing into the Nifty. So those are called the index fund. Then there can be a fund of fund, which are the FOF. So I have created a separate detailed video on the fund of fund. You can go ahead and check if you want to know more about fund of fund. And also there can be international funds. The international fund is like, let's say there is a fund which is based from the US, but it is investing into UK, it is investing into that US based fund is investing into UK or Australia or India. So they are creating a portfolio not only within the domicile, it is also investing outside its domicile. So that is where these are international funds. So those are the different types of mutual fund. But as I said in the beginning of my video itself, mutual fund can be categorized into far more different sector based on what basis you are categorizing them. So this is all about the types of mutual fund. If you want to know about details about any particular of the mutual fund, you can write down into the comment. I will definitely make a video on that. Thank you very much. Keep watching.